What if I told you that the move we just witnessed in silver could be the beginning of something much bigger? While most people were distracted by stock market headlines and political drama, silver suddenly exploded higher, catching traders, investors, and even some Wall Street analysts completely off guard. The price surge happened fast, and now many people are asking the same question. Is this just another short-term spike, or is silver finally waking up after years of being ignored? Welcome back to Pulse of Silver, the channel where we break down the biggest moves in the silver market, uncover what mainstream media often misses, and help you understand what is really driving precious metals right now. Today's story is massive because silver didn't just move up quietly. It skyrocketed, and the reasons behind this rally may surprise you. Over the past few years, silver has lived in the shadow of gold. Gold usually gets all the attention whenever there is fear in the economy, inflation concerns, or global uncertainty. But silver is different. Silver is both a precious metal and an industrial metal. That means it reacts not only to fear and financial instability, but also to growing demand from industries around the world. And right now, both of those forces are colliding at the same time. The latest rally started building quietly behind the scenes. Central banks around the world have continued printing money at historic levels. Governments are carrying massive debt, and investors are becoming increasingly nervous about the future of fiat currencies. At the same time, inflation remains stubborn in many parts of the world. Even though official reports may say inflation is cooling down, regular people still feel the pressure every time they buy groceries, fuel, or pay bills. That loss of purchasing power is pushing more investors toward hard assets like silver. But there is another major reason silver suddenly exploded higher. Industrial demand is surging. Electric vehicles, solar panels, artificial intelligence infrastructure, and advanced electronics all require silver. In fact, silver has become one of the most important metals in the global technology race. Every new solar installation needs silver. Every expansion in green energy increases silver demand. And unlike paper currencies, silver cannot simply be printed out of thin air. At the same time, supply growth has not been able to keep up. Mining production remains under pressure in several countries due to rising costs, labor issues, and declining ore quality. Many analysts are now warning that the silver market could face deeper supply deficits in the coming years. When rising demand collides with limited supply, prices often react violently. That is exactly what we may be starting to witness now. What makes this moment even more interesting is the growing fear inside the financial system itself. Investors are watching rising government debt levels, unstable banking conditions, and geopolitical tensions across the globe. Many are beginning to realize that the financial world looks increasingly fragile. Historically, during periods of uncertainty, investors move toward assets that hold value outside the traditional banking system. Silver has played that role for thousands of years. Now suddenly the market is paying attention again. Trading volumes are rising, silver-related search trends are increasing online, and social media is filled with discussions about where prices could go next. Some analysts believe this is only the beginning of a much larger move. Others warn that volatility will remain extreme. But one thing is becoming very clear: silver is no longer sleeping. And the most important part of this story is that many ordinary investors still have not entered the market yet. If silver continues gaining momentum while the public remains mostly on the sidelines, this rally could become much bigger than most people currently expect. The question now is not whether silver moved. The real question is why this move happened now and what could happen next. To truly understand why silver suddenly skyrocketed, we need to look deeper into what is happening inside the global economy. On the surface, financial markets may appear stable. Stock indexes continue reaching high levels, government officials keep repeating optimistic messages, and central banks try to calm investors with promises that inflation is under control. But beneath that calm surface, major cracks are beginning to appear, and silver may be reacting to those warning signs before the rest of the market fully understands them. One of the biggest concerns today is the exploding level of global debt. Governments around the world borrowed massive amounts of money over the last several years. During economic slowdowns and crises, central banks responded by printing trillions of dollars and keeping interest rates extremely low. That easy money system created temporary stability, but it also created enormous long-term risks. Debt levels are now so high that many governments struggle to manage interest payments without borrowing even more money. This creates a dangerous cycle. When governments print more currency or expand debt too aggressively, investors begin losing confidence in the purchasing power of money itself. That fear pushes capital into hard assets like gold and silver. Historically, silver performs very strongly during periods when people start questioning the stability of paper currencies. At the same time, many investors are becoming nervous about the banking system. Over the last few years, we have witnessed multiple banking problems around the world. Some banks collapsed almost overnight, while others required emergency support to survive. Even though governments stepped in to calm markets, the events reminded investors that financial systems are more fragile than they often appear. When trust weakens, people search for assets outside the banking system, and silver becomes attractive again. Another important factor behind this rally is the growing belief that interest rates may eventually fall again. Central banks increased rates aggressively to fight inflation, but higher rates also slow down economic growth and increase stress on debt-heavy economies. If central banks begin cutting rates in the future, many investors believe precious metals could enter a powerful new bull market. Lower rates usually weaken currencies and increase demand for hard assets. But while financial fear is helping silver, industrial demand may be the real game changer. The world is currently moving through a major energy transition. Governments and corporations are investing heavily into solar power, electric vehicles, battery systems, and high-tech infrastructure. Silver is critical for all of these industries because of its unmatched electrical conductivity. Solar demand alone has become enormous. Every solar panel requires silver paste to function efficiently. As countries race to expand renewable energy capacity, silver consumption continues rising rapidly. Analysts are now warning that industrial demand may remain strong for many years, creating ongoing pressure on global silver supplies. This is where things become especially interesting. Unlike gold, much of the silver used in industrial products is difficult or expensive to recycle. Large amounts of silver are consumed permanently in manufacturing. That means supply cannot always return to the market easily. If demand keeps accelerating while mining output struggles to grow, the imbalance could become much more severe. Meanwhile, retail investors are also starting to return. Physical silver sales have increased in many regions, and online discussions about silver are becoming more intense. Many investors feel silver remains undervalued compared to gold and other assets. Some believe the market has been artificially suppressed for years, and that the current rally may represent a major shift in sentiment. What we are seeing right now may not simply be another temporary spike. It could be the early stages of a larger revaluation of silver itself. The market is beginning to realize that silver is no longer just a forgotten metal sitting quietly in the background. It is becoming a strategic asset tied directly to both financial uncertainty and the future of global technology. As silver continues climbing higher, one major question is starting to spread across the market. How high could this rally actually go? Some analysts believe silver could still be massively undervalued compared to historical levels. Others are warning that if current economic conditions continue, silver prices may shock the world over the next few years. To understand why some investors are becoming so bullish, we need to examine silver's history. Silver has experienced explosive rallies before. During past periods of inflation, financial instability, and monetary uncertainty, silver prices moved aggressively higher in very short periods of time. In some cases, the metal doubled or tripled within months. That is why experienced silver investors often describe the metal as quiet for long periods before suddenly becoming extremely volatile. One reason silver moves so dramatically is because the market itself is relatively small compared to other financial markets. It does not take as much capital flowing into silver to create major price swings. When institutional investors, hedge funds, and retail buyers all rush into silver at the same time, prices can move with incredible speed. Right now, many analysts believe we may be entering exactly that kind of environment. Inflation remains a long-term concern, governments continue spending aggressively, and global tensions are rising in several regions. Investors who once trusted stocks and bonds completely are beginning to diversify into hard assets. Gold has already attracted significant attention, but silver often follows later with even stronger percentage moves. Another reason some experts are excited about silver is the gold-to-silver ratio. This ratio measures how many ounces of silver are needed to buy 1 ounce of gold. Historically, when the ratio becomes extremely high, many investors view silver as undervalued relative to gold. Over time, the ratio often moves back toward historical averages, and when that happens, silver can outperform gold dramatically. At the same time, mining companies are facing growing challenges. New silver discoveries are becoming harder to find, production costs continue rising, and environmental regulations are increasing pressure on miners worldwide. Building new mining projects can take many years, meaning supply cannot respond quickly if demand suddenly surges higher. This creates the possibility of a major supply shock. Imagine a situation where industrial demand remains strong, investors continue buying physical silver, and mining output struggles to keep pace. That kind of imbalance could create rapid upward pressure on prices. Some analysts even believe the market is dangerously close to such a scenario already. But perhaps the biggest driver of all is psychology. Financial markets are heavily influenced by emotion. When investors become excited about an asset, momentum can build very quickly. We saw this happen with cryptocurrencies, technology stocks, and housing markets in previous years. Silver has not yet entered that kind of public frenzy, But if prices continue rising sharply, mainstream attention could explode. The moment ordinary investors begin fearing they are missing out, buying pressure can accelerate rapidly. Social media discussions, financial news coverage, and viral market predictions could all feed additional momentum into the rally. This is why some experienced traders believe the current move may only be the beginning. Still, silver remains highly volatile. Sharp pullbacks can happen suddenly, and emotional trading often leads to mistakes. Some investors chase rallies without understanding the risks involved. Others panic during temporary corrections and sell too early. The silver market has always been emotional because it reacts strongly to both fear and excitement. What makes this moment unique is that multiple powerful forces are supporting silver simultaneously. Financial instability, inflation fears, industrial demand, supply concerns, and growing investor interest are all colliding at once. That combination does not happen often. And when it does, silver tends to attract serious attention very quickly. While the silver rally is creating excitement, it is also creating fear among many investors who stayed on the sidelines. Every time silver surges suddenly, people begin asking themselves whether they missed the opportunity. Some rush into the market emotionally, while others remain frozen, waiting for prices to fall back down. This emotional battle between fear and greed has always been part of the silver story. Right now, market sentiment is changing rapidly. For years, silver was ignored by mainstream investors. Many people viewed it as boring or outdated compared to fast-moving technology stocks and cryptocurrencies. But when confidence in traditional markets starts weakening, attitudes can change very quickly. Investors begin looking for assets with real-world value, and silver suddenly becomes attractive again. One reason emotions are becoming stronger is because the economic outlook remains uncertain. Inflation continues hurting consumers, housing affordability is under pressure, and many families feel financially stretched. Even though official economic reports may sound positive, ordinary people often experience a very different reality. That gap between government messaging and everyday life is pushing more investors toward alternative stores of value. Geopolitical tensions are also adding fuel to the silver rally. Around the world, conflicts, trade disputes, and political uncertainty are increasing market anxiety. Investors hate uncertainty because uncertainty makes the future harder to predict. During these periods, safe haven assets usually perform well. Gold often leads the move initially, but silver can become even more explosive once momentum builds. At the same time, large institutional investors are paying closer attention to precious metals again. Some hedge funds and wealth managers are increasing exposure to commodities as protection against inflation and currency weakness. When big money starts moving into a relatively small market like silver, prices can react aggressively. There is also growing discussion about whether silver has been undervalued for years. Some analysts argue that paper trading in futures markets has distorted true price discovery. Others believe physical demand is becoming more important than paper contracts. Whether or not those theories are completely accurate, one thing is clear. Demand for physical silver products has remained strong in many areas despite price volatility. Coin dealers and bullion sellers have frequently reported increased interest whenever prices move sharply higher. Many buyers are not looking for quick profits. Instead, they view silver as long-term financial protection. They worry about currency debasement, banking instability, and the long-term health of the global economy. This shift in thinking is important because it changes how people approach silver ownership. Instead of treating silver like a short-term trade, many investors now see it as insurance against an uncertain future. That mentality can create stronger long-term demand because people are less likely to sell during temporary price swings. Meanwhile, younger investors are also entering the precious metals space. Social media platforms, financial podcasts, and independent market analysts have introduced a new generation to silver investing. Many younger buyers are skeptical of traditional financial systems and are searching for assets outside mainstream markets. If this trend continues, silver could benefit from an entirely new wave of demand over the next decade. Combined with industrial growth and supply challenges, that demand could create a very different market environment compared to the past. Still, experienced investors understand that silver's path will never be perfectly smooth. Volatility is part of the game. Prices can move sharply in both directions, and emotional reactions often create chaos in the short term. But despite those risks, one message is becoming louder across financial markets right now. Silver is no longer being ignored. The rally we are witnessing today may represent far more than a temporary price spike. It may be a signal that investors around the world are beginning to prepare for a very different financial future. As we look ahead, the big question becomes whether this silver rally is just getting started or already moving too far too fast. Nobody can predict the future with complete certainty, but what makes this moment so important is the number of powerful forces supporting silver at the same time. Rising industrial demand, global debt concerns, inflation fears, unstable financial systems, and growing investor interest are all pushing in the same direction. That combination has created one of the most interesting silver environments we have seen in years. Many longtime silver investors believe the market is entering a completely new phase. They argue that silver is no longer only a precious metal used for coins and jewelry. It has become a strategic resource tied directly to the future of technology and energy. Solar power expansion, electric vehicles, artificial intelligence systems, and advanced electronics all require large amounts of silver. As the world becomes more dependent on these technologies, silver demand could continue rising for many years. At the same time, governments around the world continue facing difficult economic problems. Debt levels remain extremely high, inflation pressures have not fully disappeared, and central banks are trapped between fighting inflation and supporting economic growth. If economic weakness increases, many believe central banks may eventually return to easier monetary policies. Historically, those conditions have been supportive for precious metals. This is why some analysts believe silver could eventually surprise the market with much higher prices than most people currently expect. But even the strongest bull markets experience corrections. Silver has always been volatile, and sharp price swings are normal. Investors who enter the market emotionally during moments of excitement sometimes panic during pullbacks. That is why understanding the risks is just as important as understanding the opportunity. What makes silver fascinating is that it often moves quietly for long periods before suddenly exploding higher. By the time mainstream attention arrives, much of the early move has already happened. That is exactly why so many investors are paying close attention right now. They do not want to be caught unprepared if silver enters a larger long-term rally. At the same time, caution remains important. Markets are influenced by countless factors, including interest rates, economic data, political events, currency movements, and investor psychology. Silver prices can change quickly, and no rally moves upward forever without pauses or corrections along the way. For now, though, the momentum is impossible to ignore. The sudden surge we just witnessed has forced the market to pay attention again. Investors who ignored silver for years are suddenly watching every move closely. Analysts are revising forecasts, financial media is talking about precious metals again, and social media discussions are exploding with speculation about where prices could go next. Whether this becomes the beginning of a historic bull market or simply another chapter in silver's volatile journey, one thing is clear: silver is back in the spotlight. And if current economic trends continue, this story may become even bigger in the months ahead. Thank you for watching Pulse of Silver. If you enjoyed this analysis, make sure to subscribe to the channel, turn on notifications, and stay connected because the silver market is moving fast, and the next big move could happen sooner than anyone expects. This video is for informational and educational purposes only. Nothing discussed in this video should be considered financial, investment, or trading advice. Silver and precious metals markets are highly volatile and involve risk. Always do your own research, consider your financial situation carefully, and speak with a licensed financial advisor before making any investment decisions. Never invest money you cannot afford to lose.